This is Chuck Carnevale. I'm the Chuck in the Markets Up Chuck. And, today's blog was titled, "It's Not Too Good to Be True." It's really frustrating when, we've had all this doom and gloom and this horrible market that we've gone through, and we finally get some good news in the stock market. Instead of people basically embracing that and getting excited about the fact that we're finally starting to see some, good returns again, everybody's freaked out that the market's going to go down again. And so what I thought I'd do is I'd take a look, first of all, at the S&P 500. This is a 20-year chart in the S&P 500. The green line of the earnings line of the S&P 500, using the Graham-Dodd chart, the normal multiple of the S&P 500 over the last 20 years has been 17. The more historically longer number has been 15, and a lot of that's attributed to this overvaluation that we saw during the irrational exuberant period. But I think what this chart really shows and really clarifies is the importance of earnings. And as you can see, that stock market, as connotated by the S&P, has pretty much followed stock prices of the stock market have pretty much followed earnings. When it was out of whack like it was in the late 90s, it corrected back. Recently, we've had a drop-off in earnings, but I do want you to notice the last recession was 2001. We had a drop-off in earnings, then we had this acceleration of earnings during this period right here where the stock market did extremely well. We're seeing the same, as Yogi Berra so aptly put it, deja vu all over again. I would argue the market is slightly overvalued today if you're looking at the overall market, but it's nothing to the point where anyone should be panicked or afraid of. Actually, I believe as earnings continue to advance, you could also argue that based on future earnings, the stock market is undervalued today. Now, that was from the perspective of the general stock market, but I also argue and have discussed many, many times in this blog that it really comes down to it's a market of stocks, not a stock market. Individual companies are even more important. So if I look at names like Oracle, for example, I want you to notice how the price correlated very closely with its earnings. I'm just looking at what really is a 5.5-year chart here. I want you to notice that Oracle did pretty well during the recession. The price dropped, however, but now it's recovering back to its intrinsic value. Technically, based on this chart at least, Oracle is still undervalued at today's price, even though it has rallied from a low of 15 all the way up to 21. You can say the same thing about Aflac. You can see how the stock price correlated very close to the earnings. The earnings continued to grow, and yet we had this big drop-off in price, and now Aflac is recovering. Aflac actually has a long way to go. I think Aflac, technically would be worth over $60 a share, and it's only trading at 41. And, of course, it did get down to $11 a share, but you can see how, the stock price has really, rallied dramatically from its lows. And my final example is a company like Cognizant. Here's a company with no debt on the balance sheet, generates very strong cash flows. You can see the market in normal times really, capitalized at a very strong price-earnings ratio of over 40 times earnings, but the company did get undervalued, and now it's rallying dramatically, from its all-time low of 14, it's rallied up to over 34, and yet this is another example of a company that I would argue is still probably being underpriced by the market. So it comes down to a couple of points. Number one is, let's enjoy the good market. We're due for it. The recession is rapidly getting better. We're hearing even better numbers on unemployment over the weekend. There's a lot of reasons why we should start to become optimistic. Don't let all the doom and gloom and the headlines from the media who loves to scare us keep you from, participating in what's probably the best opportunity we've had in 20 years to be a long-term investor in great American companies. This is Chuck Carnevale saying thanks for listening, and talk to you again tomorrow.